Today, the SEC's crypto policies could be impacting the agency's ability to hire. Yuga Labs responds to claims of eye damage from guests who attended its ApeFest event. And David Wachsman, the CEO of a blockchain consulting firm, weighs in on what's next for crypto after SBF was found guilty. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the red this morning, with Bitcoin dropping further below $35,000. Ether fell nearly 2%, and XRP sank a whopping 7%, a day after climbing 9% on positive headlines, including Ripple's use in international CBDCs. Let's talk about the top stories. First up, the SEC's crypto policies might be hindering its hiring abilities. A new report from the agency's Office of the Inspector General, or OIG, found that the SEC faces challenges in recruiting specialists in crypto assets. Two reasons: the OIG points to a small candidate pool of qualified experts in the competitive field, and the fact that many candidates hold crypto assets and don't want to give them up. The Ethics Council prohibits agency employees from holding digital assets while working on matters that involve crypto. And the OIG report says, quote, candidates are often unwilling to divest their crypto assets to work for the SEC, making it hard to bring in new hires. Next, Hong Kong is reportedly considering spot crypto ETFs as part of its embrace of the industry. The region's Securities and Futures Commission told Bloomberg that it's weighing the approval of spot exchange-traded products for retail investors if the proper regulations are put in place. The chief executive of the SFC told Bloomberg, quote, we're happy to give it a try as long as new risks are addressed. Our approach is consistent regardless of the asset. Hong Kong is amongst a crowded field of cities and countries vying to be a hub for crypto innovation, including the UK, Dubai, and places here in the States like Miami. Finally, Yuga Labs, the group behind the Bored Ape Yacht Club, has responded to the bizarre case of vision damage at its ApeFest event over the weekend. The group said on X that it's working to identify the cause of the reported eye-related issues. The Post mentioned that, quote, based on our estimates, we believe that much less than 1% of those attending and working the event had these symptoms. After attending the annual ApeFest event in Hong Kong, some guests reported severe eye burn, and some said the problem stemmed from UV lights. All right, back to prices for our main story. Crypto World's Talia Kaplan spoke with David Wachsman, the CEO of global blockchain consultancy Wachsman, on the recent Bitcoin rally and what's next for crypto following the verdict in the trial of Sam Bankman-Fried.
Last week, Sam Bankman-Fried was convicted of orchestrating a multi-billion-dollar fraud on FTX customers. There's no doubt that the crypto industry cannot wait to move on and restore its reputation stained by several scandals and bankruptcies, including the implosion of the crypto exchange SBF founded. Now, Bankman-Fried might face another trial in March on other charges, but now that the first trial is behind us, what do you think is next for crypto, and how can the industry rebuild its reputation?
Well, first, I think you're right. The reputation of the entire industry took a gigantic hit last November. And unfortunately, the drama behind the SBF trial, the uncovering of all of his crimes over the past year, has left a huge trust deficit with the entire industry. We've had regulators in the United States, policymakers in the US, and their counterparts in every country in the world screaming bloody murder about the digital asset industry. It's been horrendous. We've seen VC pullback in terms of funding new projects. LPs aren't committing to funding some of these VCs, which makes it harder and harder for them to deploy the capital and dry gunpowder that they happen to have. It's caused an issue with all of the companies that are already within the space who have raised money, and it's had many, many knock-on effects. However, I've got to say this, everyone in the digital asset industry that I've spoken to, and Wachsman is the largest consulting firm focusing exclusively on the space, says that this is good news. Getting this behind us, or at least most of the way behind us, means that we can actually move on and focus on what we should be talking about, which is innovation and moving forwards. So I think that that's going to be really what's next, is a focus on what's next post SBF.
Interesting. So what do you think lawmakers should focus on now as we approach 2024, especially following the guilty verdict in the trial of Bankman-Fried, which of course put the FTX collapse back into the spotlight, as you astutely noted. We've seen some regulatory developments here in the U.S. since that collapse. For example, over the summer, U.S. lawmakers advanced the Fit for the 21st Century Act to establish a crypto framework. But were those developments enough, and what do you think should be the priority for regulators now?
Well, when it comes to the policymaker side, unfortunately, I think the Congress, the way it currently is established, it's going to be very difficult to get anything passed in the next year. it's tough. I'm hoping that we see some bipartisan movement forwards on this, because almost any clarity, including these acts, would be a net good for the industry. What we saw with FTX is that their non-regulated offshore entities are the ones that were conducting this. Onshore regulated entities almost certainly wouldn't have the same issues that we see here or that we saw with FTX. For example, if they were simply to split custodianship, which is where the digital assets are held, from where the trade executions occurred, the exchange part, you would have seen Alameda Research taking billions of dollars of FTX consumer or customer deposits. That is a terrible crime, but again, could be solved with simply some regulatory clarity here in the United States. And so I'm hoping that's what policymakers, I should say, are doing, which is to pass some sort of bipartisan legislation, have Biden sign it ASAP, and then regulators are going to have to work with that framework. And I've got to tell you, again, Wachsman's a global organization, so we see this as not only US-centric, but regulators around the world and policymakers will be seeing what the US does, and many will follow suit.
One can certainly hope, but let's move on to prices. Recently, we have been seeing Bitcoin trade around $35,000 after being stuck in a tight range for months, unable to cross the $32,000 level. What do you think is driving Bitcoin's price right now? And do you think this is the start of Bitcoin's next bull run, perhaps?
It's a good question. We're seeing sustained price at a level not seen since pre-Luna crash. And for those of you who are aware, the Luna crash back in May of 22 essentially precipitated almost all the upheaval that we saw in the digital asset industry. It's caused what many are calling the crypto winter that's been around for at least a year and a half. And we're seeing Bitcoin price levels above that. It seems sustained. I can also tell you from conversation with clients worldwide that people are optimistic for the first time in more than a year and a half. So I do think at the very least, we're experiencing some sort of mini bull. But I've got to tell you, having been in this industry since just after the Mt. Gox disaster of 2013, I suspect there might be a drawdown in late December, early January. We've seen this before. When people have to either pay their taxes or we get towards the new year, you very often see some sort of price correction. And I would anticipate that for Bitcoin sometime in the next month or two. But I do believe we have a sense of sustained optimism in the industry. We're seeing fund inflows to the major funds for Bitcoin for the first time in over a year and a half. That's obviously a net positive here. So I think we're going to see a lot more upward price movement in the next 6 to 8 months. And I would say towards the latter half of next year, we're going to see a bull market again.
So overall, what do you think it will take to catapult Bitcoin into its next bull run? Industry insiders I spoke with point to regulatory advancements, the potential approval of those applications for spot Bitcoin ETFs, and the key technical events called the Bitcoin halving as catalysts. Do you agree?
I agree with all of those, but I think we need to add some macro indicators on here as well. When interest rates overall flatten, alternative assets become more successful and simply more viable. So I believe that as we see the Fed stop raising interest rates almost every single time, we're simply going to see more and more movement into Bitcoin and other types of highly regarded alternative assets. That's one. Two, I think we're also going to see more and more use cases of digital assets, including Bitcoin, across the board. And as a result, we're going to see more capital inflow into the space and more consumer interest. And lastly, I simply think, back to your earlier point, the Bitcoin halving is going to be a major moment for the industry. We are seeing that Bitcoin miners are increasingly willing to hold on to the Bitcoin that they're mining. They think it's going to be more and more valuable. And these are the Bitcoin miners spending millions and millions, if not billions of dollars in CapEx to simply create Bitcoin and secure the network. To me, this is the most optimistic sign that you can possibly see for the industry, because these are the ultimate insiders, the people producing and securing Bitcoin. And these people are optimistic right now. So post-halving, I would expect, once again, there to be some sort of bull market in the second half of 2024.
In a nutshell, what's your outlook for crypto in general for 2024, especially as we're approaching the end of the year?
What we always see, or just about always see, is that when Bitcoin leads, others follow. And what we've seen is a bit of an altcoin rally in recent weeks that probably is led by simply Bitcoin moving forwards and sticking at this much higher sustained price point. This is, once again, inspiring optimism in the VC community, in the trading community, and I think we're going to see a lot more of that in 2024.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.